So Bitcoin is genius in so many ways. One of the most genius is the halving, right? There's an embedded number go up technology in the code. Bitcoin today at 600 billion, something like that, going to 5 trillion, no brainer. Like just totally easy. There's only one asset in the world that is both commodity and currency, gold, right? When it trades like a commodity, it mean reverts to production cost. Exactly your point. And he's exactly right. But when it trades as currency, what happens? It goes up a lot. And because it's a store of value. And so people look at stocks. Stocks, all-time highs. Well, not right now, but recently. Only if you price in dollars. If you price in gold, stocks are unchanged since 1996.
Hey everyone, thanks for watching this episode. If you enjoyed this episode, make sure you like and comment below. And to find future episodes in your feed and push notifications, make sure you subscribe. And if you click the little bell, you'll get every new episode as it's released. Thanks again for watching. Hey guys, I'm going to take a quick pause to introduce the first sponsor on the Jay Gould Show. I am happy and proud to say that this show is now sponsored by Withum, Smith & Brown, which is a forward-thinking, technology-driven advisory and accounting firm that is committed to helping big and small companies be more profitable, efficient, and productive in today's complex business environment. Withum now also has a dedicated crypto and blockchain technology team to help early-stage businesses properly navigate all the crypto tax-related matters. I've been using Withum both personally and professionally for nearly a decade for all of my business's personal needs as well. I'm very happy with them and I highly recommend Withum. You can contact Withum by visiting their website at withum.com. Now back to the show. Mark, welcome to the show.
All right, Jay, great to be with you. And, I just noticed that it looks like maybe we're co-investors together in Liquid Death.
Actually, yeah, we are.
That's cool. Love the product.
I got in through Mike Jones. I'm an LP, so I have indirect exposure, and then he got me direct exposure as well as an introduction. They're killing it. Liquid Death. Everybody should buy Liquid Death. By the way, got a little shill here.
Awesome. Yeah.
Absolute amazing company. Yeah.
Yep.
Anyway, so I want to just jump right in and talk about Morgan Creek Digital. So you started Morgan Creek in 2004. Tell me how you started it, and let's not go to the earliest years of your life, but like started 2004. Yeah. You founded Morgan Creek, and then I guess I'm friends with Jason Williams, and Pomp came in with him at Full Creek. So tell me that whole situation, how that all kind of came about.
Yep, absolutely. So I had managed money for endowments, and I was working down here at University of North Carolina at Chapel Hill. And the short version is we had done quite well from 2000 to 2002 in the first tech wreck, mostly because we had a lot of hedge funds and a lot of venture capital. And so we were flat in that whole period. Average endowment down 25%. A couple wealthy families came and said, hey, why don't you come work for us? I'm like, nice of you to ask, but I don't really want to work for one firm, but maybe starting a firm called Outsourced CIO. In fact, I actually technically think I coined the term OCIO. I think I was the first one to use it in a presentation way back when in 2004. And so we launched with a couple clients. We grew that to a handful of clients and a nice little business, morphed from there into fund of funds. In 2008, one of our biggest investors, an individual institution-like capital, came to us and said, your fund stuff does well, fund to funds, 15, 16%, that's great. But your direct deals, like Liquid Death, we co-invested in that directly through a fund relationship. But your deals, they do better. They do 30%. I said, well, that's not because we're geniuses, just math. Right? We're holding for a shorter period of time because we come in later and we pay 70% less fees because we're going direct. Mm-hmm. So we get 30% IRRs. So we launched a series of direct investment funds and made a bunch of direct investments. So fast forward, one of the things we had always done is back talent, and mostly in the hedge fund space, but also in the venture capital and private equity space. But we backed pretty much anyone who came out of Tiger. Julian Robertson, mentor of mine for many years, very lucky. And everyone who left, whether it was Lee Ainsley to form Maverick, or John Griffin to form Blue Ridge, or Steve Mandel to form Lone Pine, or Dan Moorhead to form Pantera. And so we gave him his first institutional check 20 some odd years ago to do a macro fund. 2013, he calls me up and says, hey, you want to have dinner? I'm like, sure, I always want to have dinner with my friend. So I go out to San Francisco, sit down, he says, hey, I'm shutting down the fund. I'm giving back the money, and I'm going to spend the rest of my career on blockchain and Bitcoin. I'm like, Dan, why would you give back $1 billion, charging 2 and 20? He's like, because this is going to be the greatest thing. I'm like, okay. And look, in 2013, I had heard of Bitcoin.
Sure.
I knew what blockchain was, kind of. But I was not running drugs on Silk Road. I was not a cryptography student. I didn't get it, right? I would say the Winklevoss twins and I were introduced to Bitcoin the same month, May 2013. They're multi-billionaires and I'm not. Why?
Exactly.
They had a visa with the guys and I wasn't. And I wasn't part of that culture. And so I was skeptical. And it took me a while to do the work. But as soon as Dan said infrastructure, picks and shovels, I'm like, oh, I've made a lot of money in that. We invested in Google and eBay and Yahoo and the internet. And then we did a bunch in the mobile net around 2010. Yeah, this all made sense to me. So we invested in his venture fund. It's up, 20 times at this point. It's done well. FTX is a big investment. And make a long story short, it took me a couple years to get comfortable, but I finally convinced some clients to buy some Bitcoin, to buy some Ethereum, to, invest in Dan's funds and blockchain capital with the brothers. And then I met Pomp. And it was funny. I met Pomp through a deal. We were investing in Lyft. We were early investors in Uber, early investors in Didi, Quadi, which became Didi, in Ola and Grab and Lyft. And we were trying to convince Pomp and his partner Jason to invest in Lyft through one of our special purpose vehicles. And I thought he was a nice guy. He had just moved back to North Carolina. He had left Snap. And make a long story short, we spent 20 minutes together. They ended up doing something separately and didn't see him for like 9 months. And then I heard him on a podcast, the Power Podcast. I heard him on O'Shaughnessy's podcast. And it was only 25 minutes. It was super short. And I said, I'm going to follow him. I hit follow on Twitter and like. That's something I would say. That is something I said. And I'm like, I got to meet this guy. So met him for breakfast. And this is the end of 2017, and met him for breakfast, then turned into lunch, turned into breakfast the next day. And at the end of the second day, I'm like, we got to do something together. So we figured out we'd come together and form Morgan Creek Digital. So Morgan Creek Capital, umbrella organization, Morgan Creek Digital inside. Jason and Pomp came in. We formed a fund. We raised a small fund, $40 million, made 29 investments. It's worked out really nicely. It's up smartly.
How much was it? The original
40 million.
Okay, 40. The initial. You guys raised multiple funds, though, right?
We met this really visionary duo at Fairfax County. So they run the two pension funds there, and they gave us 21 of the 41 that we raised.
Wow!
And the rest is history, so to speak. So we did that in 2018. Raised another fund in 2020, and about halfway through the second fund, that was a $100 million fund. Pomp comes to me and says, hey, I got this call. And I tell the story, you see the Fighting Irish in the background. I tell the story of how I got to Notre Dame. I used to work at Notre Dame. And I would say Lou Holtz had a lifetime contract at Minnesota, unless Notre Dame called. Notre Dame called. He goes to Notre Dame. Great year, wins the national championship, or great 11 years, wins the national championship. And I was working at a firm in Chicago, and I got the call from Notre Dame. I wanted to go back to my alma mater. So I did that. And he said, I got this call from Naval, and he wants me to go do this solo VC thing. And I'm really sorry. And I know I said, dude, look, if Naval called me, I'm probably leaving and go work for the guy. I mean, he's the philosopher king. And I said, don't worry about it. So he and Jason downshifted to venture partners. And I basically had a choice, right? I could say, it was fun. I'm going to shut it down, right? It was a good experiment, raised 2 funds. I don't want to do that. I love what I'm doing now. I'm having more fun than I've ever had in my career. And that is not a criticism of the rest of my career. It's just, I had a blast working for universities. I had a blast building Morgan Creek Capital. And now I'm going to spend the next, 15, 20 years doing Morgan Creek Digital. And it is amazingly fun. And so I'm not going to shut it down. So then I could go recruit somebody from one of the big dogs like A16Z. Too expensive. They got more money than God. All right. I could promote someone from within. I had 2 young guys. They were good, but not good enough. I mean, not mature enough, not seasoned enough. Or I could go, find some other people who had been in the business. And so I've found these 2 guys who had been running a fund. We had co-invested in a couple deals, Figure, and we were working together on the DM project, which actually never came together, but we were working on being one of the validator nodes. And long story short, I brought them in. So Jason and Pomp are venture partners. I've got 2 new general partners, and the 5 of us make Morgan Creek Digital. We just closed our 3rd fund and still make investments. We made about 70 investments in infrastructure businesses. We put about 20% of the capital. We can go up to 30, but we put about 20% of the capital in protocols directly. Bitcoin, Ethereum, we're big investors in Solana. So that's the story.
It's interesting. Jason didn't want to stay as a GP, I guess. He just wanted.
Yeah, Jason's first love is healthcare, right? He built FastMed, which was the first doc in the box. He was a physician assistant and said, most of what happens in an ER could happen in an office. Yeah. And it could be with a physician assistant, not a doc, so I can cut the cost. And he built this business, sold it for $500 million to private equity, and he liked digital. He kind of came into digital through another entrepreneurial venture where he recycles tires and converts it into energy. And hey, we can use the energy to mine Bitcoin. So that's how he and Pomp came together. So he came in and he was like, look, I think I want to go try healthcare again. And so he's been dabbling in some other stuff, and he's got involved in NFTs and he's still active. Like I said, we talk every Monday. They're still active, referring deals, talking about deals, sitting on boards. So they're active venture partners of Morgan Creek Digital, but they're not general partners the way they were in Funds 1 and Funds 2.
Interesting. Yeah, I remember Jason telling me, he's like, it's because I've been in the venture world for a long time too. I was an entrepreneur for a long time, do a lot of deals as an angel investor, have a small family kind of fund. Me and my wife, we were partners in my previous company. And he said, I want to go raise institutional money. He goes, you sure about that? He's like, bro, let me tell you something. He's like, you're working for people now,
That is the thing that Jason is an iconoclastic guy. I mean, he's just a unique guy. And, we get along because we both have strong opinions loosely held. Sure. But that perspective was interesting, right? Now, to him, I was the suit. Now I don't wear suits anymore. I got my polo shirt. I've gone to the black t-shirt like everybody else, but I don't wear the suit anymore. Although this morning on TV, which is kind of why I look bad today.
You got to wear that, yeah.
6 o'clock. So I did wear the suit jacket, no tie, but I did wear the suit jacket for Fox. But where I pitched our new crypto ETF, CRYP. Yeah. And the thing about it is he didn't like putting the suit on, right? He's not a suit guy. And he didn't really like, they say, working for the man. Yet the man and woman pay the bills.
Yeah, that's right.
And look, the rule, the golden rule. He who has the gold makes the rules, or they who have the gold make the rules. And they happen to be big institutions. And so I learned a long time ago that you can be the best investor in the world. You can have the best product in the best sector. And if no one cares, right, because you don't sell to the right pools of capital, it's like the joke that's not politically correct, right? If a man says something in the forest, there's not a woman there to hear it. Is he still wrong? Yes. Ask our wives. They'll tell us that. Right. But I still love the fact that what they brought to the equation was, one, youthful enthusiasm. And Pomp has more energy than most other people And Jason has just a boundless enthusiasm for big ideas. And so together, we actually had a really interesting picture of what could be. in the space. And so, I talk about being co-investors in Liquid Death. We also created an innovation fund that invests in small businesses that are doing innovative things like canned water. That's cool, which it is. And we invested in a new way to do, laundry and delivered to your house instead of you having to drop it off all the time. And
which company's that? I'm actually in a company like that.
What's yours? Laundry.
Oh, that's right. Jason told me that. I'm in something called Rumby. I don't know if you've heard of those guys.
There's lots of ways to use the power of networks and the power of applications and the power of a supercomputer in your hand to do things that we spend a lot of time on. And shopping is a great example. I actually like to shop. I'm a weird guy that way. But it is just way better to push a button and have it show up.
Yeah, absolutely.
It just saves the time of driving around trying to find. Now, I enjoy that process a little bit, except for stuff that I don't care about, like toilet paper and toothpaste. And it's just better to show up in my house and it comes when I need it. So
100%.
I think what's interesting about blockchain technology is where the disruption is happening. So look, the internet disrupted media and commerce. Totally busted open the monopoly that state-owned media and the networks had on media and information. And it busted open the stranglehold that a couple big, retailers had on commerce. But what blockchain does is it breaks open, busts wide open, an 800-year cabal run by the banking cartel. And I use cartel intentionally because it is a cartel. And it's been run by the same families, right? The Medicis and the Rothschilds and the Morgans forever. And they like being the source of trust. But what blockchain does, it replaces trust with truth. I don't need to trust you to have a transaction. I just have to have truth on a blockchain ledger that you and I can exchange value and have it be indelibly, permanently, and encrypted and cryptographically secure transaction. I don't even know who you are. You can be behind an anonymous JPEG if you want. We can be face-to-face. It doesn't really matter. But in the old days of commerce, in terms of money, I lent you money. I said, Jay, here's $100. And I wrote down in my ledger what single entry accounting, but I was unscrupulous. I wrote down 200. So you come back with the 100 plus interest, you pay me my 10%, and you think you're done. I'm like, oh no, Jay, you owe me 220. No, I only borrowed 100. Not what it says here. Okay, so you had to trust me. So the Medicis, the benevolent Medicis, came along 800 years ago and said, hey, Jay, you write down 100. Mark, you write down 100. And we, for a small fee, will determine that the numbers match.
Right.
Okay, that's great. And if I want to send you money, right? You're sitting up in Jersey. I want to send you money from North Carolina. You have to have a bank account. I have to have a bank account. They're going to charge us a fee to transfer money. Well, we don't need them anymore. With blockchain, Bitcoin, you have an account. I have an account. I send it to you. It's over. Done. No bank account. No trust. No third party. No fees. Like if I have a Strike app, you have a Strike app, I can send you my, I make the joke, right? If I had a mother-in-law in El Salvador, which I don't, she's in Tulsa, Oklahoma. But if she was in El Salvador and I sent her $1, she would get 70 pesos because Western Union takes a cut and the Rothschilds take a cut because it goes across international borders. So there's the treaty signed 400 years ago that says they have to get paid to the Bank of International Settlements. And she gets 70 cents on the dollar. That's ridiculous. She gets a Strike app. I get the Strike app. Now we're big investors in Strike. So, and I send her $1. She gets 100 pesos. That's better.
Yeah.
And so now 0 is the wrong number. Jack has to figure out a way to take a slice, but anything less than 30% is going to be a good slice.
Sure.
And so all of what we're doing goes to financial service. And look, as big as media is, as big as commerce is, financial services is orders of magnitude bigger.
Yeah.
And when you think about 700 trillion with a T, right? And 1 trillion, you and I sit here together for 31,710 years, $1 every second for 31,000 years is 1 trillion. So 700 trillion of stocks, bonds, commercial real estate, private businesses, collectible cars, wine, every asset in the world is eventually going to be on a token. And a token is not a little crystal thing. It's not a little gold. It's a line item on a blockchain that is immutable and a permanent digital property right. Like, I hate the term NFT. Yes, they are non-fungible tokens. Yes, that isn't accurate. And no, they are not just JPEGs. It is a record of title.
Right. It's actually not a JPEG. It's just, that's what most people, the layman, don't understand what it is. You're not actually getting the JPEG.
Rights, right?
That's copyable.
Terminology. Yeah. It's a property right. And property rights are really valuable. And there's $7 trillion every year wasted verifying property rights.
Sure.
Whether it's brokerage transaction fees, wire transfer fees, non-sufficient funds fees, transfer fees, title insurance, insane.
Oh, it's huge. It's huge. Yeah.
We know that I own my house, right? I don't need to pay someone $1,000 to secure again for the 100th time. Okay, maybe not 100th, but for the 20th time that this house is the same house, right? Once that's on a ledger, it's over. And all of that waste will go away and will become market cap of businesses in this digital age. And again, it's the greatest wealth creation opportunity I will see in my lifetime.
I want to jump over to Bitcoin as we talked in the pre-call here, the Bitcoin bull market. One thing I want to say before you talked about the suits, it reminded me a few years ago during the pandemic when everybody was, coming out of the pandemic. I remember seeing the morning where Kramer's on in CNBC, and he says, "I can't believe Goldman Sachs says they don't have to wear suits now." He got so mad at that. and then just a few weeks ago, I see like Pomp wearing a suit on his podcast. I go, everything's upside down. The world's going bizarre.
Everything's upside down. Yes, Pomp in a suit on the Best Business Show. It's like mind blowing. It's like,
what is he doing?
But here's the thing: there was actually an interesting study back in 2001, 2002, right? Which I think we're living through again, right? We had the tech bubble, we had the correction, we had a recovery at the end of 01, and then the bottom dropped out in 02 because Enron, WorldCom, Cisco, all the fraud bubbled up to the surface. And what they found was the auditors who had gone to casual dress had the highest incidence of fraud. Because there's something about putting on the suit and buttoning up that makes you actually work. And look, I don't want to pick on everybody, but casual dress, reduced productivity. Work from home, reduced productivity. It's like, no, I'm much more productive. Bullshit. So many more distractions. The dog barking, you go get a snack, you decide I'm going to go take a walk. And it's not that commuting is good. Commuting sucks, okay? But a couple things. One, collaboration matters. People being together, collaborating matters. And Zoom is okay. I mean, you can do most of it, but it's better in person. And this idea of everyone being alone all the time is stupid. It's just stupid.
It's not human.
And it's bad for society. It's bad for productivity. And ultimately, we're going to go back. Now, I don't say we all have to go back to suits, but there is something about getting in my car and coming into my office and going to work.
Listen, I'm with you. I'm a dinosaur. Whenever I had my company, we had like 70 people. We were in the office. We're whiteboarding in conference rooms, and there's like a vibe and energy going on. And like I said, I'm an investor. The company Rumby that you mentioned, the Two Laundry, very similar. They're very remote company. Everybody's remote. And Ben, the founder, I'm like, you're all remote? He has like a little small office in Cincinnati, but I'm like, I couldn't do it. I'd want everybody there. But in some ways, I had a few companies previous, and one of my investors was Reid Hoffman. He used to say, when are you going to take your career seriously and move to the Silicon Valley? And I'm like, I think I'm doing all right out here,
Right.
But there is something about a talent pool in a hotbed like the Valley where you can get people that have built scalable businesses, been through all the problems that you're about to, you don't have to do it for the first time with your team. You have people who've done it at PayPal or eBay or whatever previously. But anyway, let's move.
Are so important, Jay. I mean,
I agree.
Look, analogs are important, right? Not just so you can ask people questions and collaborate, but also for the subtle pressure where the better half says, "Hey, look what they did. Why don't you do that?"
Yeah.
And I hadn't thought about it. I like this safe job with the big conglomerate and the pension. I never thought about being an entrepreneur. Maybe I should be an entrepreneur. And so, but collaboration is really important. But on the Bitcoin question, when you think about Bitcoin is just a single use case of blockchain technology. Now, it's a really good use case. Digital gold is a really good thing, and it's here to stay. And for 5,000 years, there was one money in the world: gold. Everything else is currency, credit, backed by debt. Money is an asset that exists in the absence of a liability. There aren't very many of them. And there have been, there were seashells and, stone wheels and all that stuff. But we basically settled on gold for the last 5,000 years. And a single ounce has bought a fine person's suit, back to suits, right? From Cleopatra's time to a suit of armor to a zoot suit in the 20s to Savile Row today. You take 1 ounce of gold, you get a fine person's suit. And that's pretty amazing. It's been a perfect store of value. And Bitcoin is better. I don't know if you ever seen, I'm a big movie guy of the movie Knight's Tale, Heath Ledger, and the whole jousting thing. And he wins his first tournament, and he gets this gold calf thing. Maybe it was a stag. I think it was a stag. And, Chaucer has gotten in trouble, and he's got to bail him out. And he literally bangs the stag on the table, breaks off a leg, and says, go what you do with this. That is a really bad way to divide gold. And here's the other problem with gold. I want to send you half a bar. I got a bar under my desk. Actually, the funny story about that. So Kyle Bass, right, famous hedge fund manager. So I'm in Kyle's office one time, and he's got a desk like I'm, table I'm sitting at, and underneath one end is looks like a file cabinet. And he said, I want to show you something. And he goes down. It's actually a safe, and he does a combination. And he pulls out a 22 kilogram gold coin.
Everybody now knows. So you better get some security.
I mean, it was gigantic. And so anyway, I don't have one of those. But let's say I did and I wanted to break it in half.
Yeah, right.
I couldn't, right? Then let's say I wanted to send it to you.
Yeah.
I couldn't.
It's not transportable.
But right now, with a couple of clicks, I can send you Bitcoin.
Sure.
Right now. Now, I don't keep any on my phone, guys, so don't SIM swap me. I've been SIM swapped twice. They got nothing. I'm smarter than that, so don't do it. But
just annoying.
I could send you Bitcoin instantaneously, so it's better than gold. Sure. But it's only one use case. And there's so many other use cases for blockchain. There's so many other use cases even for Bitcoin as a base layer payment rail, right? I don't send Bitcoin to that mythical mother-in-law in El Salvador. I send her fiat using the Bitcoin blockchain. Jack takes the Bitcoin risk, fraction of a second.
Yep.
And converts the dollars into Bitcoin, sends it across, converts again, and gives her pesos. So there are a lot of use cases, and Lightning is interesting. But anyway, I digress.
Okay, I want to get into, let's talk about the Bitcoin 2020 bull run. Yep. What you think caused the run up, and then we'll get into what caused the crash. So I want to hear your thoughts on what caused the Bitcoin run up in 2020.
So Bitcoin is genius in so many ways. One of the most genius is the halving, right? There's an embedded number go up technology in the code, which is the halving. Well, what are you talking about? Well, if you think about it, miners have basically fixed costs. A little bit variable, but basically fixed. And they get a certain number of block rewards. Every 10 minutes, you get a certain number of block rewards. Every 4 years, you cut that number of rewards in half.
Sure.
So either the miners go out of business or the price rises. So there's a built-in momentum to have the price gradually rise over time. But here's the thing, and again, not politically correct, but markets, particularly these markets, tend to be dominated by guys. Guys, we're hunter-gatherers, right? So we only see things that are moving. My favorite joke on that is I go to the refrigerator, my wife says, "Get the ketchup." I'm looking, I don't see ketchup, close the door. She's like, she opens the door, grabs the ketchup. Like, it wasn't moving. I couldn't see it. So the reality is, as soon as something's moving, we're on it. And so then what happens is when the value of a network is perfectly knowable based on Metcalfe's law. We can model any network, whether it's Amazon, Apple, Facebook, Bitcoin. We can model the network on this parabolic curve, okay? Not the, parabolic upside, but the normal parabolic growth curve of Metcalfe's law, and it will tell us the fair value. So when the price is below fair value, okay, when the price was 3,200 in late 2018, the fair value was 11,000. Investors like me started to buy it. Okay. Then what happens is the halving occurs. It starts to move. It gets a little bit above fair value. Fair value moves up. So now fair value was in the low 20s last year or in 2020. And so the price went from 10 to 20. And then it went to 25. And then it went to 30. And it happened quickly. Why? Because then the traders come. So the faster it starts moving, then the traders come. Well, then what happens? Well, then the speculators come. Well, what are speculators? Speculators are people who said, I don't give a shit about any of this stuff. That thing's moving. It's moving fast. I'm in. And I'm in with leverage. But then what happened was the idiocy of the Fed policies following the lockdowns to hand people, again, mostly guys, locked in their apartments, no sports to gamble on, no sports to go watch, you can't go to the gym to work out your aggressions. So what do? You become a degenerate gambler in the stock market. So meme stocks are born and crypto. And so that pushed us to levels of Stupidville. Okay. We got so much leverage into the system by February of 2021. And Michael Burry talked about this in February of 21. He said, y'all don't understand how much leverage there is. And it's what's driven us to $60,000. And it's going to end. And it crashed. Okay. Right after Burry said it, it crashed into the summer, got down to 30. And at 30, right, the fair value had moved up into the high 20s. And now we were right about a fair value. And Saylor and others said, now you got to buy it. And again, the degenerate gamblers came back in with leverage. And then you had people like Three Arrows got big leverage by using the system and perhaps lying. I'm not accusing them of lying, but some have said maybe they lied about how much equity they had. So they got to big leverage, right? Stupid levels. And then you had things like Celsius, who it's a great business, but using your own token as collateral, I don't really love that model because we saw with Luna, that's an unstable coin. It should not have been allowed to be called a stable coin. It's an unstable coin. Algorithmic stable coin is an oxymoron. It's like jumbo shrimp and military intelligence. I don't mean that. Some military people. Pomp's a good guy. But I do. So that's a long-winded way of saying number go up technology, the habit. Fair value, when you're below fair value, you rise slowly to fair value. As you start to go above fair value, it starts to go faster and faster because the speculators come in and they lever up more. Then you get a break. Well, what causes the break? Futures. What are you talking about? Well, there was this problem. Everybody wanted a spot ETF, particularly the guys at Grayscale. Because what had started as an arbitrage of the premium in the trust, right? Because they own the spot, and the only way you could get it was through these private shares, which then converted to public shares. So it started as a premium, but then it was a closed-end fund. And as more private shares turned public, you had excess supply, limited demand, and it went to a discount, caused all kinds of problems with the leveraged speculators. So now people are selling that and the spread gets wider. So now you got this problem. I got to convert to an ETF and I got to get people to buy spot ETF, spot Bitcoin. No freaking way is BlackRock and the banks, JP Morgan, allowing that to happen. Right? Because I described it as the four phases of adoption. Phase one. Right? The famous Gandhi quote, which Gandhi didn't say, and I wish you remember who did say it, but is first they ignore you. 2009 to 15, they ignore you. Bunch of nerds, geeks with your magic internet money, whatever, go away. Stupid. Then they laugh at you. 2016 to 21, God, bunch of nerds and geeks, just stupid.
They're all going to get wrecked.
They're going to get wrecked, right? It's going to go to zero. Well, then they fight you. 2022,
Yeah.
JP Morgan was like, whoa, BlockFi? You have like $10 billion that used to be fiat. It got withdrawn from fiat because it's paying zero, converted to stable coins or Bitcoin and deposited, now pays 6 to 8. 10 billion is a real number. So we're going to call the regulators in New Jersey and say, go cause some problems. And then we're going to have the SEC come in and say, let's go cause some problems. And so they settled, and again, without admitting guilt, because they didn't do anything wrong, you sold an unregistered security. You said it wasn't a security. Well, that's not the point. We can say that you sold an unregistered security. Well, how can you say that? And their attorney, who happened to be the former chairman of the SEC, said, look, you're right, but you lose. It's the 315 train problem. You're standing on the railroad track, you look up, and the train's about to hit you. And you say, and it's 310. You say, no, you're not supposed to be here till 315. You're right, but you're dead. So get off.
I had a similar situation happen to me once, Mark. I created the first video sharing site back in 2004. And in 2006, we got sued by Universal Music for DMCA infringement. And it was a complete bogus lawsuit.
Of course.
Google acquired YouTube for $1.6 billion. They also wrote a check for $50 million to Universal. They took the $50 million and they sued us and Grouper, which is now Crackle and a bunch of other companies, MySpace. It was a collusional effort. Like you're saying, it's like, so in the end, they all won their lawsuits, the larger companies, right? We went away. We were casualty of war.
Magically, this is the then they fight you phase.
Yeah, exactly.
The then they fight you phase sucks.
Yeah, and but in the end, you always win, right? Like, so Napster died, but today you have Spotify, right?
Well, and
Bolt died, but today you have YouTube. Yeah.
And as you were to, right? A centralized organization, which has existed all of time, is all about leveraging the single brain.
Yeah.
You got one CEO, one home office, one server. So the music industry, it's like, what? I don't want Mark sharing music files with Jay.
That's right.
That hurts me. So what do? You arrest the CEO, you blow up his server.
Yep.
Literally, like with a sledgehammer.
Yeah.
They have the video of them smashing his server. Okay, end of Napster.
Yeah.
Well, okay, Bitcoin. We don't like it. Okay, which server are you going to blow up? Which CEO are you going to arrest? Right? The joke was when Zuck was testifying to Congress, they're like, well, they subpoenaed the CEO of Bitcoin, but he was unavailable.
What they can do, and you know this, right, is they can go after all the companies that facilitate the transfer of it, which are the on-ramps, right? So they can keep doing that over and over, and they can cause a lot of friction. But ultimately, globally, you can't, just like they try to do in the US with copyright and audio and music and video, ultimately we just go offshore. So somewhere in the world, we'll house this stuff. I mean, you can't stop it. You can't stop it.
Every innovation has been fought. You know, most people have no idea where the term red flagging comes from. You know, when you red flag, that's a red flag. Yeah. I'll tell you where it comes from. The automobile, right? The horseless carriage was invented. Yeah. The horse and buggy manufacturers were very unhappy. They paid money to New York to pass a law called the red flag law that if you bought a horseless carriage, you had to hire someone to walk in front with a red flag telling everyone you were coming so you didn't hit anybody. Have you ever seen someone with a red flag walking in front of a car? Maybe Tesla should have that now because, you know, it tends to run into things. But it's crazy. And innovation always happens. We don't have horse and buggies. I mean, the Amish have them and we have some in Central Park, but
no more ice boxes.
Most people drive cars. I don't want to go back. And look, we are going to have digital money.
Yep.
Full stop. We're going to have digital payment rails. ACH and Fedwire are 70-year-old technology, run on COBOL and Fortran. They're horrible technology, but they're the best thing we got. And the incumbents really like it. Like I said, 800-year-old cabal controlled by the Fed, which is neither federal nor has any reserves. It is just a cabal run by banksters, right? Modeled after the Bank of England, which is formed by the Rothschild family, modeled after the Bank of Amsterdam, which is based on founded by the Rothschild family. So it all kind of goes back to the same thing. And ultimately, those people don't want to be disrupted. I get that. Sure. But ultimately, they will. And decentralization, I mean, Eric Schmidt, who knows something about tech, right? We'd all agree that Eric's a pretty smart guy. he said it best. He said, look, what Satoshi Nakamoto, whoever he, she, they are, invented Bitcoin, awesome. But that wasn't even the big thing. The big thing was that you created the ability to have a unique asset in the digital space. Right?
I got to push back on this though, because this is the argument for blockchain, and I'm more of a maxi when it comes to this kind of stuff. Not that I think these things will exist. The maximals think it's going to zero. It's definitely not going to zero. You don't see an asset that goes to $1 trillion, which is everything outside of Bitcoin in the crypto space, go to zero. Yeah. So sorry guys, if you're maxi, NFTs ain't going away, right? It's just not happening. And the world will be tokenized, to your point, right? The problem is it's not truly decentralized, right? And so the other things, like they have the Ethereum Foundation, right? Like they're just not truly decentralized. So in terms of where you want to store your wealth, it should be Bitcoin. If you want to play around in other things, there could be some disruptions. There could be manipulation. There could be the Rothschilds of the world, which you would say,
point, right?
Yeah.
Such an important point. Money, gold, Bitcoin. That's it. Mm-hmm. That's money, right?
Yep. Everything else is sort of kind of speculation.
Wealth, for a portion of your wealth that you want to protect from the ravages of fiat, right? I use this all the time. When I was growing up in Kirkland, Washington, a gallon of gas was 33 cents. Okay. I just paid $5.33. Same gallon of gas, does the same thing, produce the same amount of heat, actually a little less because it's got ethanol in it. But let's say it's the same. It's not because the gas got better. It's because the money got worse. North Carolina, where I live, my house, according to Zillow, went up 40% in the last 12 months. Did my house grow? Did it get more efficient? It actually wore out. I actually had to put money into it to keep it. No, the money got worse. There's no inflation, right? Inflation is caused by excess demand or limited supply. We don't have inflation. We have currency devaluation. The money was made worse. And this is the part where you said earlier that people were disappointed in the inflation issue. No. They've got the wrong time horizon. Bitcoin is instantaneous. So over the last 2 years, money supply went up 50%, 100%. 50% of all the money in the history of our republic, 248 years, was created in 2 years.
Yep.
So in theory, Bitcoin, right, which is priced in dollars, because one Bitcoin is one Bitcoin. But we talk about it in a currency, right? In dollars, it should have gone up 100%. It did. It's up exactly 100% over the 2 years. But it happened early. And so everybody's like, but inflation, no, CPI is a stupid number. It's such a stupid number. It's a lag effect, and it's really singly oil and used car prices.
Sure.
It had nothing to do with anything. The inflation happened when they printed all the money in 2020, and that's when Bitcoin went up. And then the fact that it went to 60, that was just stupidville.
Right. That's just exuberance.
Fair value of the network today is 31.32. Tim Peterson, who you should have on the podcast, can talk chapter and verse about that. But that's fair value. And so we're getting closer to fair value. Now, in the next cycle, okay, number go up, we'll head toward that 100,000. So the laser eyes till 100K. Okay. It's going to be a while, probably another 18, 24 months. But that is coming because every halving adds a zero to the price. So 100, 1,000, 10,000, 100,000, a million. And it's just math, and you can look at the math and it's elegant. And will we have fluctuation around that? Of course. One of my favorite charts is the stock market. If you look at the stock market, it should grow linearly about 6% in real terms because of dividends paid out 2%, real economic growth above inflation, another 2%, and then a compounding effect from just market activity, right? But it doesn't. It looks like this because of greed and fear.
Yeah.
And when there's a lot of liquidity, we get greedy and stocks get super overvalued. So here's the question I ask investors all the time. I did the Fox this morning. And a month ago, Maria says, shouldn't investors be buying tech stocks after this correction? I'm like, well, here's the problem. Tech stocks after the correction today, as we speak, are in the 93rd percentile. They've only been this expensive 7% of the time in history. Now, they were at 3, okay? So they were at almost the worst ever. And now they're in the 7th percentile expensive. Bitcoin is in the 3rd percentile cheap. It's only been lower relative to its fair value 3% of the time in history. Which would you rather buy? It's just not even close. And I'm not saying put 100% there, but what I'm saying is you should be shifting to value and away from expensive.
So Mark, one of my investors is this guy, Bill Auslander. He used to run $20 billion at AllianceBernstein, retired. And he was telling me that Bitcoin, it's commodities, but commodities in his experience has been that it always reverts back down to the production cost. So he's like, what's the production cost of Bitcoin? And the lowest production cost, mind you, right? The lowest production cost. It's pretty low for people like your friend Pomp and Jason with PRTI. It's almost like nothing, right? It's like they're
and again, it's genius, but it's only half the story. Mm-hmm. And it's actually a really important point. There's only one asset in the world that is both commodity and currency. Mm-hmm. Gold. Gold, right? When it trades like a commodity, it mean reverts to production cost.
Right.
Exactly your point. And he's exactly right. But when it trades as currency, what happens? It goes up a lot. And because it's a store of value. And so people look at stocks. Stocks, all-time highs. Well, not right now, but recently. Only if you price in dollars. If you price in gold, stocks are unchanged since 1996. Just let that sink in for a second. Mm-hmm. The price of equities, the S&P 500, is unchanged in gold because the dollar has devalued. Everybody's like, the dollar's so strong. Look at DXY. It's up 11% this year. Why is that? Well, because DXY is the euro and the yen. And the euro and the yen are more toilet paper than the dollar. If you look at the dollar versus the renminbi, it's actually flat. Because the renminbi is the strongest currency in the world on its way to becoming the world reserve currency. But people aren't paying attention to that. And they believe this narrative that the dollar is strong. We have our president saying, China's not the manufacturing powerhouse of the world. We are. Well, in 1935, we were. But today, no. And actually, China doesn't even want to be that anymore. They're outsourcing it to Vietnam and Cambodia and Sri Lanka. China wants to be us from 1980 to 2000. Yeah. And they will. They took 700 million people from abject poverty to middle class over the last 30 years. In the next 30 years, it will be the greatest consumptive force the world has ever seen. I mean, and here it is, it's like, the story of Singapore, right? It's an isthmus and they have these big guns at the end of the isthmus pointing out to sea because they thought the Japanese would come in by boat and they'd blow them out of the water. Well, the Japanese, being smart, said, guns, pull the boats up, march up over the mountains, come back down, and conquer Singapore. Because the guns were focused the wrong way. And so we're fighting the wrong war, right? Trump came in and said, we're going to put up trade barriers and tariffs. You mean like Smoot and Hawley did in 1931? How'd that work out? Tariffs have never worked. They're always a bad idea. But here's the problem. 20 years ago, it was about made in China. We exported our jobs and our pollution to China. So we, the boomers, could buy cheap stuff. Right? That's what we did. Just like Europe exported their jobs and their pollution to us in the late 1800s when we were the emerging market, right? And the rivers would catch on fire and, there was no, environmental protection agency and pictures of LA, right? The smog in the 70s. It was horrible or 60s. And it was horrible. And so that's China now, 20 years ago, that's what it was all about. Today, it's about made for China. China is the greatest consumer market we should be doing everything we can to build stuff and send it there, right? But we're fighting the wrong, trying to tax the stuff that comes here.
Right.
They're like, well, you're going to charge me more for soybeans? I'll just buy from Argentina. Or, you're going to charge me more for coal? I'll just buy it from Australia. I mean, are you idiots? And the answer is yes. And so anyway, I digress.
Okay, let's shift over to Blockfi. I want to talk about, you guys are the largest investor in Blockfi, an amazing story.
Second largest.
The second largest, amazing story. You guys went really early in, grew up to a $5 billion company, and then it fell apart. There was a video that you put together for your LPs that I guess got leaked. I got the benefit of seeing that before you guys took it offline. Saw that. It was really interesting. The one thing I kept thinking to myself is, this is a classic case of information asymmetry as I'm watching this and listening to you asking the LPs to come forward. And I'm thinking, well, Jason claims he's a billionaire. Mark's got to be not doing so bad. Why don't you guys just buy this yourselves, like fund it yourself, and then go back to that? And you could have probably signed a document with those, say, hey guys, there's a conflict of interest, but maybe we get an approval from LPs that we can do this. And then if you want to, an option, but not an obligation, you guys can buy back into it later. Why didn't you exercise that option to do that? And personally, just you and Jason.
Look, there's a bunch of good questions there. And look, the reality is, so two things. One, that video is one of the most unbelievable things that I've experienced in my career.
Oh, that sucked, right? Yeah.
So we did a call for our LPs to make them aware of what had transpired over Father's Day weekend, where basically Blockfi, because of a series of events, mostly Celsius shutting their doors.
Yeah.
It's Celsius not shut their doors, we wouldn't be having this conversation. But by Celsius shutting their doors, people are like, oh my God. And it literally started to run on the bank. Now, there are some, myself included, who think there was a bigger plan to get Celsius and others to shut their doors, because there's a story in 1907 called the Knickerbocker Trust. And Knickerbocker Trust was a trust company that was set up to provide an alternative to the banks, which JP Morgan owned. And JP Morgan was quoted once of saying, I like a little competition. And so he didn't like Knickerbocker Trust so much. And according to the lore, he spread some rumors that Knickerbocker Trust was in trouble. And the famous picture, if you go to Wikipedia and look for bank run, you'll see a picture of men in suits and women in suit dresses running with their umbrellas to get their money out of the bank, like it's a wonderful life. And long story short, he precipitated the bank run. Knickerbocker goes out and he magnanimously says, I will guarantee all deposits of the banking system, literally like Mr. Potter in It's a Wonderful Life. In exchange, I get to buy the business for pennies on the dollar. It was called the 1907 Trust Act. Okay. Now, interestingly, the current situation sounds very much like that. So you had a run on the bank triggered. You had people fomenting. You had this Otter guy on Twitter, anonymous, saying, oh, all this stuff's going to go under. And first it was Celsius, then it was Blockfi, then it was Leaden, then it was Voyager. And he just kept picking on these lenders. Some might say someone involved in the banking cabal was behind that. I don't know. But long story short, once you trigger a bank run and people start withdrawing, you have a problem, right? You can either honor the depositors or you can, honor your shareholders. And the challenge was where it was. And so the question, so we put out this video to our clients to tell them, look, we're going to try to raise capital to fend off, JP Morgan, the new JP Morgan, FTX, to come in and buy this for pennies on the dollar. And
why didn't you just buy it though? Why didn't you and Jason and Pomp just step up?
So that comes next. So then the second part is we sent that to our clients on a Friday, who weren't at the live call, never thinking, bad on us, never thinking that one of our own clients
would send it to somebody else.
Post that video on YouTube.
Yep.
I mean, are you fucking kidding me, Jay?
That was crazy.
You're going to do harm
to your own company,
and to yourself, right?
Yes, exactly.
You're an owner.
It's like Blazing Saddles. I'll shoot myself. Stop.
Exactly. And so somebody in our client base, and and they're yelling at me, and I'm like, guys, my bad that I never thought that I had clients that would shoot themselves in the head. I really didn't. So then the question of, okay, well, why didn't we, just Morgan Creek, buy it? So a couple things. I mean, our funds are not big. Our first fund is 40 million. Our second fund was 100. Our third fund, 120. So we didn't have enough to do it ourselves. So then what about individuals? Well, it's a liquidity thing. He who has the liquidity in a crisis wins. And
so Sam had the liquidity, and
I'm fine, right? But
Sure.
I'm not, to point, I could have been much more fine had I gotten Bitcoin earlier. I didn't. But I'm fine.
And I guess Jason was just too tied up.
Yeah. Most of my assets, Jay, are illiquid. I own lots of venture capital and businesses, and I don't have a lot of liquid assets.
Yeah, same way.
Jason, purportedly had a bigger stake, but I think the challenge was what precipitated the bank run was a bear market in those liquid assets, where he had some issues and he had some Celsius issues. And so I think all of us personally were in a illiquid position.
Yeah.
We weren't lucky like SBF. SBF,
he timed the market better for liquidity.
There are three things you need in a crisis. You need conviction, you need courage, and you need cash. Yeah. We had conviction and courage. We didn't have cash. And so I spent, literally my whole European vacation trying to, put this deal together. And we came close. I mean, we came really close. We had 2 term sheets that we put in, one with a big wealthy family who's been invested in a bunch of other crypto things, and 2 brothers. One brother was in, the other brother's like, nah, I just can't get there. So then I found another very large family in Hong Kong, and they're like, yeah, we love this. We're definitely in. They actually approved it, but they approved it subject to legal and regulatory due diligence. And that was on the 29th, and they wanted 2 weeks. I'm like, guys, we have 1 day. And so they just couldn't close. So,
wow.
So we came close. And in the end, it is back to the golden rule, right? He who has the gold makes the rules. And I applaud SBF for being there to make sure that these very important businesses, I know there are a whole bunch of people who don't think they're important and they should go away, and those people are wrong, and they piss me off, right? If people believe that the only role of Bitcoin is to put it on a thumb drive and bury it in your backyard, I have news for you. We have that. It's called gold.
Right.
And gold is superior to Bitcoin in that regard, because Bitcoin on a thumb drive has a small risk, right, of not being accessible. If I bury gold in my backyard, water's not going to hurt it.
You could do all these other things on top of Bitcoin, though, right? With the Lightning Network.
Of course. But my only point is that in today's form, that doesn't exist. Right? We don't have enough capacity in the Lightning Network. We don't have any layer 3s and 4s to really have transactional. It's coming. And look, whether we have a single chain world, everything's built on top of Bitcoin, or a multi-chain world, is the $64 trillion question.
It's funny, man. The guy I mentioned to you before, Mark, Bill, I brought him on Clubhouse one time and talked to the Maxis, and American Hodl and all them were like bashing him, coming at him 100 miles an hour. He goes, whoa, slow down. Last time I checked, we have more than one currency in the world. He's like, do we not? You may say that who the hell would want to own those currencies, but people do. He's like, so to say that it will all go away, he's like, that's just, it's not real. It's not reality.
It's such an important point. And look, I'm tired of the tribalism. I'm tired of the wars. I tell the story that, I surf spaces at night, right? When I'm bored.
Yeah. I've seen you on a few times. Yeah.
And they'll be like, get out of here, you shitcoiner. I'm like, dude, I have more Bitcoin than you. What would you say? And like, that doesn't matter. If you own anything else, you're a shitcoiner. I'm like, okay, stop. Let's have dialogue and debate of why you feel that way. And there is a role for other things in the world. Then I'll go to an Ethereum chat or a Solana chat or space. And then like, get out of here, you maxi. I'm like, man, I own more Solana than you do. And that's not a brag. That's not the point. It's just you can hold divergent views in the absence of information to confirm that a single view is correct, if someone can show me how we can migrate every financial services business onto Bitcoin and Lightning, bring it. I'll invest in all of those ideas. But so far, I see better execution on Ethereum. I'm not a fan of proof of stake, full stop. I don't like it. And I know other people would disagree with me. I don't like it. I don't really get it. I think that the environmental FUD narrative is stupid. I mean, it's stupid. Everything we do in life, what you and I are doing right now, is about converting energy to value.
Correct.
We get up in the morning, we fuel our bodies with energy, and we try to create value. Whether you create it by talking, whether you create it by producing widgets, whether you manage capital. You
can't moralize energy. I think Jason says it all the time. I agree with him. It's just ridiculous.
Energy
it's totally ridiculous.
Converted to value is the purpose of life. Everything. In fact, people don't like to talk about this, but slavery ended mostly, Civil War and all, but mostly because we discovered oil. Here's an amazing stat. There are 40 person years of labor in 1 barrel of oil. It's a lot of years. So think about the pyramids, right? How'd you create the pyramids? Slaves, lots of them, lots and lots. Okay, and I'm not saying that was good. I'm not condoning it. It's wrong, but it was the only way. Once oil was discovered, we could then harness power, and we went from human power to industrial power. Now, this evolution, this revolution, is from the industrial revolution to the cognitive. Now it's about brain power and harnessing brain power. And that digital assets are a manifestation of this cognitive revolution. And we're you take flared natural gas in West Texas, one of the most toxic things in the world, right? You've seen the picture of America at night, total black, except North Dakota and West Texas, because they're flaring all this gas. If I cap that with a microturbine and attach a Bitcoin miner, I'm now saving carbon, which I actually don't believe in, but okay, we're saving carbon from the atmosphere, and we're converting to value that I can send anywhere in the world permanently, no transmission wires, no pipelines, no right-of-ways, no construction, no rare earth, no little salamanders dying. Perfect. Beautiful. How is that bad?
Yeah.
Right? Gold mining uses 60 times more energy than Bitcoin mining. The banking industry uses 2,100 times more energy. Now, look, per transaction, yeah, I got it. But here's the thing. Why do we have bank branches? Physical bank branches. We heat them, we light them, we have physical. When I don't go. The only time I go to a bank branch is literally to get a notary. That's it. And now I don't even do that. I go to the UPS store.
It's a slippery slope for the government to tell us how to use energy. I mean, think about this. There's all kinds of things. They're going to say, well, why do you have a jet ski? Why do you have a boat? What, for pleasure? That's not right. It's hurting the environment. There's no reason for that.
Tumble dryer use more electricity than Bitcoin. I'm going to go back to clotheslines.
That's right. That's right. Air conditioning, Christmas lights. I mean, you can go on and on and on. Everybody doesn't want to let go of the things that they've got accustomed to having for the luxuries or the pleasure or whatever it might be.
One of my fave things was this ad that one of the oil companies did. I can't remember which one it was. I think it was Pioneer actually did, where they showed a couple getting ready for a date. And as the commercial went on, things made with petroleum vanished. So, she's putting on her lipstick and it vanishes. And he's taking a shower and the hot water goes away. And he goes out to get in his car and the tires disappear. And they're sitting at the restaurant and they go to grab their food and the food vanishes because it was trucked. And wait, oil was involved in all of those things? I didn't think about that. So, look, we're at an interesting place in human history, right? I mean, we have this amazing exponential curve of innovation and growth, right? Most amazing time ever to be alive. And tomorrow will be even better and the next day even better. But it's hard for people to deal with that exponential growth, right?
Yeah.
We're bad at math, and we're really bad at exponential math.
Yeah, most people don't get it.
I use the joke all the time. What's 2 times 2? People are like 4. Okay. 23 times 17. I'll wait.
Yeah, my daughter with Kumon will be much better at that.
That's the limit of human intelligence.
Yeah.
Most of us need a calculator to do 23 times 17.
Yeah.
So how about non-linear regression? Probably pretty bad at that. Mm-hmm. And my favorite example of that is 20 linear steps. I'm across the other side of the office. 20 exponential steps, I get to high five you twice because I go around the world twice. It's just mind blowing, right?
Yeah, and if you take, I think it's an 11 by 11, 8.5 by 11 paper. If you keep folding it in half and half and half and half, it goes from here to the moon. People don't realize here's the thing. That's exponential.
Anyone listening to this, take that piece of paper. Yeah. I defy you to fold it 8 times. And all the macho guys, I can do that. No, you can't. You cannot fold it 8 times. If you could, and you added 12 more to 20, it'd be as high as your house.
Yep.
30, upper reaches the atmosphere. 50, the sun.
Yeah.
100, the known universe. 100 folds. That's not a lot.
No.
Is the known universe.
Yeah.
And so it is this power of exponentiality, and we're in the exponential age.
Yeah.
And all of these innovations that we talk about and people try to poo-poo, it's like, no, they're building on better. And I use this very simple timeline analogy to try to make people understand. The center of the universe was Route 128 in Boston in 1954. There's a little company called DEC, Digital Equipment Corp., funded with $75,000 of venture capital, and they wanted to make a computer. So computing went from governments to companies, and big companies that could spend millions of dollars would buy DEC computers, and Wang and Unisys and IBM, a bunch of great companies. 14 years later, there was an innovation called the microchip out in Silicon Valley, out of DARPA, government sponsored. And this guy, Don Valentine, right? People have heard of him now, but back then no one had heard of him. He invested in this little company called Intel, which again, heard of, and Fairchild Semiconductor. And the microchip led to mini computers, mainframe computers. Okay. Smaller, big as a room, but then 14 years later, and it's always 14 years because it has to do with young people. Young people create things because they don't know what they don't know. So it's half a generation. So I grew up in Seattle. Most of my friends don't work anymore. They were smart enough to go to work for Microsoft. I wasn't. And Steve Ballmer's mom famously quoted the DEC CEO saying, "Honey, why would you work for that company? No one would want a computer in their house." Yeah, pretty much. He has 18 billion reasons he was right, mom was wrong. 14 years later, innovation called the internet. Nobody wants the internet. It's not as valuable as a fax machine, says Paul Krugman. Okay, we put $500,000 in a little company called Google, took out $200 million, pretty good. And the internet was big, really big. And 14 years later, innovation around mobile phones. And now we had the mobile net. And everyone has one of these. In fact, everyone has 2 of these. And it's a pretty big deal. Now, 2024, which is still coming, we get the trust net. Or now, I'm changing the name. I used to call it the trust net. It's the truth net. Blockchain replaces trust with truth. It gets rid of this need to have a trusted third party because it establishes truth. And that truth changes everything. It changes everything because now we can exchange value over internet protocol the same way you and I are using voice over internet protocol over TCP/IP. But the problem is Tim Berners-Lee, who invented the internet, couldn't own TCP/IP. You and I can own Bitcoin, Ethereum, Solana, Avalanche. Okay, some combination of those protocols will be like what we have today: TCP/IP, FTP, HTTP, SMTP, www. It's as easy as that.
I'm going to ask you one last question before we wrap up, Mark. What are your thoughts on the underperformance of Bitcoin versus Ethereum? Like, why do you think that's happening, particularly in the last run? And it's actually happening again now. It's breaking out again.
Numbers.
Yeah. Okay.
Law of large numbers. And the easiest way to think about that is again, that's why the exponential curve fades, right? And that's why all charts, I hate chart crime, right? People show these long-term charts and they don't use log scale. And so everything looks like this. Put it in log scale,
sure,
and it looks like this. Because going from 0 to 100 is hard. From 100 to 1,000 is 1/10 as big a move, right? So what people forget is when Bitcoin was $10, adding a 0 to 100, it's a 10-bagger, okay? Adding a 0 to 1,000 is a 10-bagger. But the difference between 10 and 100 is only 90. The difference between 100 and 1,000 is 900. That's a lot. And so when you get to bigger numbers, just mathematically, it's harder to grow. And so the growth rate tends to fade. And so in 2018, when we launched our first fund, we invested in Bitcoin because we thought it was like a Series B. And a Series B, we think we can make 100x. Right? It doesn't mean you will, but we think that's possible.
Yeah. Yep.
Series A, you think, you can make more than that. And again, you're not going to very often, but you think it's possible. So Ethereum is like a Series A, and Solana and the Graph and a bunch of those are seed, right? And
seed,
a seed
pre-seed,
you can make lots and lots of money. So Bitcoin, right, over the past few years has gone up about 10x from there, but Ethereum went up more.
So you think it'll get to parity with Bitcoin if you're saying that? If I'm reading this correctly, because it'll get to some point where it's almost at parity and then it starts to slow down. And and by the way, a follow-up question, Mark, is you said there's a $700 trillion asset pie.
Yeah.
Bitcoin and it just all of crypto. It's a small slither of the asset pie. So from that point, an argument of the compounding growth and the Metcalfe's law, there should be so much more ahead. We should be in the early innings. It shouldn't be really subject to the law of large numbers yet, I would think.
100% true. 100% true. But here's the thing. Bitcoin going from today to gold equivalents.
Right. 10 trillion or so. Yeah.
10 trillion. This goes back to commodity and currency.
Okay.
Half of gold is jewelry, chalices, gilding on the golden dome behind me. Okay. That doesn't count.
Yeah.
The monetary value counts. And that's what we're going after. We're not going after the commodity piece. We're going after the monetary piece. So that's 5 trillion. So that's 250K. From here to 250K, easy. Like easy. Okay. Can't use the word guarantee, right? But it's easy.
Yeah.
3 years, 5 years, I don't know. But that's easy. Gold equivalents. The next step, which is monetary equivalents, so total global monetary system, right? That's 120 trillion. That one's harder. Now, Murray Stahl, again, someone you should have on the podcast, amazing guy, just amazing, Horizon Kinetics, makes me look bearish on Bitcoin, right? I mean, he's amazing. And I can make the case for world reserve currency someday. I think the renminbi is next and then Bitcoin after that. But I think it's a long way off. Murray says it's closer, so maybe people listen to Murray. But to go up beyond that, I think is harder. Just because, like you say, fiat currencies are going to exist. They're going to be CBDCs. So they're going to exist. And we're all going to have a portion of our wealth in Bitcoin. But most people are not going to have all their wealth in Bitcoin because it doesn't make sense. And so Ethereum, on the other hand, if it truly is the glue that binds, if it's the base layer that facilitates everything like the www dot of the Internet of Value, that could be pretty valuable. All right. But then you're like, well, it's slow and gas fees are too high, so maybe these other things cannibalize it. Definitely possible. Maybe Lightning comes in and cannibalizes it. Definitely possible. So I don't know the answer.
Right.
I think the question is the right question. But I do think that Bitcoin today at, 600 billion, something like that, going to 5 trillion, no brainer. Like just totally easy because it's better than gold. Whether it becomes a world reserve currency, that's likely, right? The world reserve currency, harder, but possible. And so I think the use case of Bitcoin as store of value is firmly entrenched. I don't think it's ever going to be a medium of exchange. I think we'll use other layers on top of it as that medium of exchange. It's just like money, right? We don't spend money, right? Money sits at the base layer at the Fed, okay, in bank deposits. And then we use FedWire and ACH, but we don't even really use that, right? And I don't carry money. I have a Visa card, but Visa is literally just a database, and it settles up once a month. I make a monetary transaction once a month. That's it. But I don't even touch the money, right? I touch ACH and FedWire and my bank deposit, but that's really not money either, because that's just a liability that actually isn't even mine. It's Bank of America's. And so my only money is what gold I have and what Bitcoin I have, because that's an asset that exists in the absence of a liability.
I'll leave you with this. Do you know Bitcoin Tina? I'm sure you know him on Twitter. He's a friend of mine. He always says with Bitcoin, the risk is to the upside, and he's probably right.
And it's asymmetric. And the downside risk is really pretty low, because again, we can model the value. And look, fear can take the below fair value. And I tweeted about this right before Father's Day weekend. I said, look, we're in a descending triangle pattern, just like we were in 2018. And the longer we stay at 30, okay, the more likely we are to break through and go to 15, because that's what happened when we were at 6 and we went to 3,200. And unfortunately, 4 days later, we went to 17.5.
17, yeah.
And that was it, right? That was the cathartic break.
Yeah,
and then June 14th was the beginning of crypto spring. And now we're in that accumulation phase. We got an ascending triangle. And as soon as we break through 24, 30 is easy. Then we're at fair value. Then the speculators start to come. Then the degenerate gamblers start to come. The value will increase to 40 and 45 and 50.
And then the halving comes,
And then the halving comes. And then we're in summer. That's when I think we see 100. And then people can stop with the stupid laser eyes. So,
yeah, exactly. Mark Yusko, thank you for coming on. Everybody, he is an investor, so you might want to reach out to him if you're a technology founder.
Absolutely.
Yeah. So maybe tell everybody where you're at, how to find you. Yeah.
I'm great on Twitter, DMs. I stink at email, but at Mark Yusko. Our website is morgancreekcap.com. Really enjoyed this. Always fun to talk to other investors, and look forward to doing this again.
Thanks, Mark.